Hi, this is Chris speaking with a video on waves and how they can help you simplify your trading. First of all, be aware though that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer, plus you are aware of the risk involved when trading. With this video, I want to explain what I was thinking when making the wave analysis and how I used that basically to make setups for myself throughout the week on the majors. I know that many traders find wave analysis to be subjective, and that makes sense, but in fact, all trading is subjective. So it doesn't matter if we use wave analysis, if we use trend lines, if we use price action, everything, the interpretation of all of those indicators and tools is up to our bias, is up to our interpretation. So from this point of view, I think that wave analysis is a fine tool to improve our understanding of the moves up and down. So if we look at the euro dollar, this is basically, I'm analyzing my own analysis, okay, from the May 30th, Monday, to Friday, June 3rd, 2006. And what I see, I started off this week and I was looking at the euro dollar, and basically, in my opinion, this is either an ABC or a 1, 2, 3, but I did see some features on the euro dollar that made me think that there could be a bounce. Now, first of all, on the daily chart, there was a support trend line coming in. That can always provide a bit of a bounce. We already had a decent trend, by the way, and not only that, but we see divergence basically between these bottoms. When we look at these bottoms here, connect these bottoms and connect the oscillator bottoms, and we see that the oscillators are just not continuing as far as they did in the past. So there's divergence as well, which of course could create a bullish bounce. So from that point of view, an ABC as well would be very normal to see a bouncing spot at this point, even if it is a 1, 2, 3. There could be a wave 4 coming in. So I was anticipating a bullish bounce when looking at those factors, but that is not enough for me to take a trade on the long right away, because we are in a downtrend. Looking at these trend lines, you can clearly see that the euro dollar is in a downtrend. So let's take a look at the hourly chart, all right? And we can see what happened is that basically at this spot, we were completing, in my opinion, what seemed to be a wave 3 of the wave 5, all right? So I expected a bit more downside ultimately before getting the upside. But I also realized that the wave 3 could be here, and a wave 4 here, and a wave 5 here. So what I basically was thinking, it depends how price reacts here. If this is a bear flag here, that would confirm a wave 4 orange here, and a wave 5 to be expected. But if we see bullish momentum, then in that case, we probably completed a green 5, and we could expect a bigger correction to the upside. So this was basically the status quo, the status at that point on Monday morning at the start of the week. And also looking at the video analysis I released on Monday, that too said if there's a bullish momentum, then I'm looking for upside correction this week. That was the weekly recap video on Monday. So let's take a look at Tuesday and how that developed as we go along. All right, this is Tuesday, euro dollar 1 hour chart, and you can see that basically price making a retracement. But more importantly, we see the bullish momentum. All right, look at that right here. We see bullish momentum. That's indicating already the potential for a bigger correction. Now, in the live trading room here, I actually was in a short based on this breakout candle. And the reason why I did that was because despite the momentum to the upside, which is a warning sign of potential correction, price did respect the 50 fib of the wave 4. So there are two scenarios that could be taking place here. Either one, we got a wave 4 retracement to the 50 fib. This breakout candle could be the one that brings us to a new low. Or B, we're going to get a bigger correction to the upside. Now both are equally likely, so I thought that the short, based on this breakout candle right here, was worth it. But I did say in the live webinar with admirmarkets.com, you will find out that you can follow our webinars on Tuesday, Wednesday morning, live trading webinars. And in that webinar I said, this is a short I like, but if I see any bullish hourly candle after this one, or soon after this one, I am exiting the short, because in that case, this breakout is not going anywhere, and in that case, we'll probably see a bigger correction and we're going to see some upside after that. And I would actually take a long based on that. All right, so that's basically what happened in that webinar, or short after that webinar, I should say. We got a bullish candle. I closed the short for break even, and a long was possible right there, and we got the upside on the euro dollar as expected. And you can see that the wave analysis made me aware of that. It made me realize that this is a potential short because of the wave 4, but I was also on my guard for a potential turnaround due to the factors that we just mentioned right here. So one day later, basically, we're looking at price respecting this trend line but breaking the downtrend channel right here. And that happened, as I said, this was the area where I exited the short and entered the long. And basically that was the wave 4, and we went up for a wave 5 to complete wave A. All right, so that was a good short. I didn't lose anything. It was a good long. I made 30-ish pips on basically that last push up within wave A. And in Tuesday afternoon, end of the afternoon webinar, I was saying here, don't go long because this could be completed. First of all, it's a resistance, and it could be completing this momentum to the upside. So you can see that I avoided going long at the blue circle because of the fact that this was a 5th wave, and I don't want to go long right, of course, as wave 5 is completing. So not only did it basically tell me to be careful here and to wait for a bear flag or wait for momentum, so I didn't trade it, which is good, because if you think it's a downtrend, you could easily short here, right, looking for continuation without any confirmation. So one bad trade avoided. If I was aggressive, I could have even traded to the upside, which I didn't do. That's fine. All right, I took the short, which I didn't lose because I was ready for the upside potential correction, which I took later on. And I managed to gain 30 pips because I know that a wave 5 doesn't go too far. It's a counter trend trade. Plus, I avoided taking the trade right up in here. All right, so this is not to pat myself necessarily on the shoulders. Don't get me wrong. It's just to show you how I use that wave analysis at different spots to make trading decisions about staying in or entering, I should say, or not entering, or exiting, etc. All right. So after that, the next morning, basically, this is a Wednesday morning, I see prices at the 78.6 fib. I see that we had a correction here, and I realized that at this point, this is looking like an ABC bigger correction. So at that point, I actually, in the live webinar on Wednesday, I took a long in the live webinar, right around here, just above the 78.6 fib, with the stop loss below the bottom. Counter trend trade, based on, partly at least, on wave analysis, expecting price to use that fibs for a bigger correction, ultimately up to the 38.2 fib at around 112.25. That was the main target, set very clearly in Wednesday webinar. Took the trade live in the webinar so that everyone can see, put the stop loss TPs as they were, and I also explained that I would be grabbing profit earlier if price shows struggle earlier than this target. So that trade worked out well. Let's take a look. Here you go. This is Thursday morning. You can see the upside. Now, basically, price here has a gap here. That's just some candles missing there. There, of course, that was a move up there, and there are candles that should be there. But basically, I took profit right here for 53 pips. The risk was 30 pips. So 53 divided by 30 is almost a 2-to-1 trade, as you can see. And I was very happy with that. Now, the reason I took it here was price action. I saw some struggle. As I already explained on Wednesday, if there is struggle, I'll take it. And I took it 53 pips. But ironically, after some fight here, the bulls did take over control again and did push it up to the 38.2 fib, all right, which was the target. And I also said that that could be a bouncing spot for downside, which, by the way, I did not take that trade to the downside, but I did say that that is a strong resistance. So anyone who might have used that could have used that for potential turnaround trade as well. So as you can see, this very nice upside here, just based on the fact that I was thinking that this is an ABC and the divergence and stuff like that, all adding to a very good counter trend trade, partly at least based on wave analysis. All right, then Friday came along, and basically what we see Friday morning before the NFP as expected, I said 38.2 fib will be a bounce, and look at that bounce all the way down. Pretty sturdy bounce, so there was a lot of pips to be grabbed to the downside. I did not do that, all right? So I'm not necessarily grabbing all these trades, but that was a strong resistance spot. We got an ABC point to the downside, and then look at that. We got a bounce to the 61.8 fib. And at that point, I decided this looks like a bigger enhanced correction. So I labeled the WXY expecting upside, because that, of course, leads us to believe that this will happen if you label it that way, right? That's the wave analysis that I did. This is what I expected under your dollar upside, all right? That was my guesstimate before NFP. Now, of course, NFP is something that can always change things, can always, is always a bit of a variable that is impossible to factor in everything. But this was my best guesstimate. I was expecting euro dollar to strengthen after NFP, considering this wave analysis. And whether this is a WXY, we don't know. Wave analysis is not always to the dot. So it's not always perfect, but it doesn't have to be perfect. That's the point I'm trying to make to wave analysts that are thinking about learning it or are starting, is that it doesn't have to be to the T. It's a supportive tool that can be used just to get a bit more information. And what is this a WXY? Well, I don't know. Maybe it will turn out to be a different account. Maybe this will turn out to be, for whatever reason, a bullish count, and this is a 1-2. I don't know if it's possible. I'm just trying to give you an idea what could happen alternatively, right? If this is a really big momentum, it could be so. So did the wave analysis still help me when I wrote WXY, even though that later on I might change it into a 1-2-3? Sure. In both cases, there's a bullish bounce. So whether it's that or that, doesn't really matter. It still helps. All right. So bullish bounce expected. Let's take a look what happened today. And this is the current euro dollar right after NFP. Look at this huge, massive candles. All right. Right after 61.8, price has moved up 180 pips already past the 113, and this is the bullish bounce that I expected. So, all right, was NFP helpful for me? Certainly. Does this happen more often, that the wave analysis is actually in line with NFPs and stuff like that? Yeah, pretty much happens. Is not something that's very strange. So now, obviously, I don't recommend to trade this. It's NFP. I don't trade it because it's too high volatility. So I'm not recommending anything here. I just want to say, with NFP, always be careful. But I do want to say that you can see throughout the week how wave analysis helped my own trading at various spots, right? At here, and here, and here, basically, and here, and here. Some of these spots I traded. Some of them I didn't. Due to circumstances and other reasons, and basically I had 2 wins and 1 break even, and that's great. Some of them were filtered out, but all of these wave moments, all of these waves, twists and turns, when you look at the wave analysis, is pretty accurate in my view, and really helped my trading and helped my understanding of the ups and downs and what market did and why it did that. And that's, I think, just a massive benefit that anyone who doesn't use wave analysis misses out on. And therefore, I am a big fan of wave analysis. Look at this upside. And you might wonder, is this a WXY? Well, maybe not. I mean, looking at the momentum, it brings that into doubt. And if you consider this to be wave 1, and this 2, and this 3, and this 4, then wave 1 bottom is getting very close. As soon as price pushes above that, and this is probably an ABC and not a 1, 2, 3. So actually, this is due to the strong momentum, due to the strong bullishness. Things are slightly changing now as we go along. Let's see how today's candle closes and where it closes and how far it pushes. And you'll see my wave analysis again on Monday morning, incorporating this new info. But certainly the bullish bounce indeed happening as expected. So if you like that, join me on every morning, Monday to Friday, admiralmarkets.com. Go to analytics, then click on wave analysis, and you'll be able to see my current prognosis for today. I typically have the wave analysis available already around 7 a.m., 7:30 a.m. Central European time. That is around 5 a.m., basically 6 a.m. GMT time. All right, and you can see my current status. You can write a chat if you have some questions. By all means, feel free to do so. I truly hope that you will take a look on a regular basis, and you can also sign up for the weekly wave analysis as well. Basically, just write Admiral Markets or info@elitecurrency.com for that information to subscribe. All right, thank you so much. Wish you all great trading. Cheers.